The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Okay, stock of the day is normally a stock that's in the headlines. Well, there's only one today. Let me tell you, that is Santos. A subsidiary of the Abu Dhabi National Oil Company has made a takeover bid for Santos, $8.89 a share. The XRG Consortium submitted its non-binding indicative proposal on Friday at a 28% premium to the last closing price. The proposal to acquire all shares is described as a final offer, as is always the case, and it follows two commercial offers back in confidential offers back in March this year. So they've been around a while. Santos has granted due diligence to them. The board intends to recommend shareholders support the deal. Gaurav, Sodhi, what do you think?
Well, I know the shares popped today, but this is a pretty disappointing outcome for anyone who's been holding Santos shares for more than a year. This basically takes the price to where it was middle of last year. Well, there you go. There's the chart.
July.
And I think what this is damning of is the strategy at Santos. I would say about 18 months ago, a major shareholder of Santos, L1 Capital, released a report outlining what we've been calling for a long time, which is the breakup of Santos. And they did it more forcefully and more articulately than we ever did, am I going to say. But what they were saying in that report was that there's a great business inside Santos. There's an LNG producer of global scale, and there's a whole lot of crap around the side of it. And if you separate those two businesses out, you can actually get hold of the good part of Santos and sell the duds. And the duds are the Cooper Basin, which is an aging gas field, capital intensive, makes no money for them, but sucks in lots of cash. You've got these Pikka oil and a couple of oil-only developments, which are expensive to develop, don't really fit with the strategy. And you've got a bunch of WA gas assets, which are actually good assets, but probably don't fit inside this existing portfolio. Right. So if management aren't going to take steps to realize values, someone else will come and do it for them. And I think that's what this deal is about today. I think the international consortium is after the LNG production of Santos, and they will enforce the split that should have happened under current management about 2 years ago.
Wow.
So this is not a celebration for Santos management or board. This is the damnation of their strategy and something they should have done a long time ago.
Okay, as an investor, do you take the money and run?
You should take the money and run. This is, it still undervalues the assets. There's probably $11 or $12 worth of assets inside Santos, and that value will be extracted by the acquirer. But as a shareholder, you're not going to get access to that. So I would take the money, yes.
Okay, Foreign Investment Review Board.
That's going to be the interesting part. Yeah. I don't know how that's going to go, Koshi. That's going to be the interesting part. If this gets nipped in the bud because of Foreign Review Board, I think the pressure is right back on Santos to do something about the structure and follow through on the split.
Okay, so if you're a shareholder, a disappointing shareholder, you've seen the pop back up to levels 12 months ago, take that. If Foreign Investment Review Board puts the mockers on it, it's likely to come down to that lower level. So if you're still a believer in the stock, you're just buying at the lower level, would you? Get back in if you wanted to.
Well, let's take one step at a time. I think that's a reasonable playbook. If this gets knocked back, we have to hear what the management says, but there ought to be a lot of pressure on them to actually do something. So we'll see, but I think that's a reasonable position.
The board has said no.
I think they've granted them
due diligence, but intend to agree to the offer, recommend to shareholders.
Yes, that's right.
It's part of the deal.
Yep.
So you're saying, board, you should have been doing better than this.
Yep.
And to accept this offer means you failed. And
yes.
You're not capable of doing what this Abu Dhabi group obviously plan to do. They're going to make the hard decisions.
Take a step further. They're doing your job for you.
Right.
Yeah.
Okay. No.
Yeah.
No. What do you
just look at the share price. There's no other conclusion you can make.
This is what I love about having Gaurav around, because there is no sugarcoating things, right? Look, they're bidding 10-year high price, and it undervalues the asset. that just tells you management what the WTF.
Yeah.
Right? So yeah, no, I don't disagree. It's a sector thematic as well. We have actually had, when it was ugly and nobody wanted to touch it, we jumped into energy, and we were in almost every segment of energy. We've got one exposure in it in different portfolios, because our view was, yes, the policy failures are going to pile up, and we had massive overweight in gold position, and we had energy and food. Gold, the only sector that's killing it, and then energy is now playing catch up, and I suspect in the next 3 to 6 months food will play the same.
Right.
And everyone gets shocked again.
Yeah.
And I'm sure they'll be shocked again when food runs. Now, to this thematic, we went into Karoon for oil, Woodside for LNG, Paladin for uranium, and New Hope for coal. And we're happy in all four. Uranium ETF is now decade high, and the cycle plays out, fundamentals. Comes to this, look, I think Gaurav's right. There's some good assets, there's a lot of crappy assets. And management hasn't done anything when the cycle was great. I don't think they're going to do anything spectacular if this deal falls over. So, you go, thank you, God. And funny how all the M&As happen just before the financial year end. I don't know why that happens. And we've had multiple stocks in our portfolios go through M&A in the last month, and I'm trying to deal with all of those, getting my head around some of them. And some of them are clear indication that management were very bad, that someone else thinks they can do so much better. And Santos is one.
So you'd have to sell, take the money and run.
Take the money and run.
Right.
Go somewhere else. Take a pick. Energy sector is the only sector in value territory. Out of all the sectors, it's bouncing. Supply side shock is there to be seen. We always knew it was coming. So
would you go into Woodside?
We're in
Woodside.
We're in Woodside. So
would you switch into Woodside?
I'm a burnt Woodside shareholder. We owned it a couple of years ago, didn't make any money out of it.
So you're still traumatised?
It's not that I don't agree with the current strategy at Woodside either. I think these guys have an addiction to spending money and some sort of allergy to handing it back. This deal in America was just very disappointing. I think Woodside has some great assets. They're good operators. Technically, they're very, very sound. But I don't want them in America. I don't want them building more LNG. I just want them to harvest some cash flow. I want to. The strategy has moved on from simply producing and selling LNG to now marketing and trading. It's quite a different business, and I have issues with that. Okay, so it's a void for me as well.
So what you're saying is, companies, rather than just keep buying things, just settle down and give shareholders a return for a while. Before you go and spend their money on something else before you've rewarded them.
To be fair to Woodside, they have a reasonable track record of doing that. And over the last few years, they have paid out relatively decent dividends. But there's always the next $10 billion, $20 billion capex project with Woodside. You can never, it's not like an iron ore business or a coal business, which is the top of the best of breed, which just sits there paying out dividends, collecting cash, paying out cash. Like that's what you want from a steady business like LNG, coal, and even iron ore. These are large, multi-decade production fields. Once you get the production in place, they just spit cash out, and the role of that cash is to end up back in your pocket and to generate high rates of return. With Woodside, the history is they then take that cash and spend it again, another $20 billion here, $20 billion there. And you can see from the share price, it tells a better picture than I could ever paint.
But the thing is, you get what you incentivize. You're incentivizing management to grow, right? And no one gets paid to pay out 5% yield. I mean, apart from Combank, where this is like ludicrously index play and everyone's trying to find a reason to explain the stupidity, but it's not. It's nothing. Everyone thinks it's like 10D chess. No, it's a basic, simple energy pump, right? It's a pump on the index and it's the biggest stock. It's like the techs in the US. And this one doesn't actually have growth. So in this context, I think management are incentivized to grow business substantially. They get a lot of shares. So their incentivization is to go out and big moves. So I actually don't mind people, management doing that in a bad cycle, because you kind of get scared in a bad cycle. Everyone goes, oh, no, it's not going to happen.
Exactly.
And then you go, like, think of Klein buying the copper asset about 15 months ago.
Yeah.
We jumped on it at $3.
Yeah.
It's now $9. I think it's going 10, 11, right?
Yeah.
So it's tripled. The guy knows how to buy assets. I'm not saying everyone's going to be that good at timing it. I don't know how, but that guy knows how to do that. Now, but when people do these scale games at the bottom of the cycle, then on the upside, you get that expansion. And I think in the energy sector, I think pretty much everyone expected there's going to be a supply side shock. It didn't happen. Everyone's like, no, it's happening. Right? Okay. Oil's bounced 30% from the May lows.
Yeah.
Right? It's happening. And so in that scenario, energy will run. Woodside's play may have looked a bit ugly before, will probably look a bit better. I'm not saying they're the greatest capital investors out there, but they will do better.
All right. Okay, that's our stock of the day, Santos, with a pretty clear view.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.